Hello and welcome to M&A Access, the official podcast of the Alliance of M&A Advisors. This is Ekaterina Kozlova, and today we're exploring the fast-changing world of independent sponsorship. Moderator Tommy Mixon leads a panel of active independent sponsors and capital partners as they discuss how the model is maturing, the expectations of investors, and the tools needed to compete in today's deal environment. Let's turn it over to Tommy to kick off the discussion.
My name is Tommy Mixon. I am with IMA Financial Group. We are a commercial insurance provider for private equity firms, family offices, and independent sponsors. I am going to introduce our panel, and then we'll get into the content. So thank you all for joining us. I'm going to pass it to Jimmy.
How's everyone doing? My name is Jimmy Watson. I am with an independent sponsor in Dallas, Texas called Clavis Capital Partners. Just a quick 101, we've been an independent sponsor for a little over 12 years, closed about 20 transactions, so 9 platforms and 12 add-ons over our time, and excited to be here with this esteemed group of colleagues here.
Hi everyone, Amanda Foyt. I'm with Comerica Bank. I'm in the middle market lending division at Comerica. And what middle market means to Comerica is focusing on banking and lending relationships with businesses 40 million of revenue and above. And I'm really fortunate. I've got a really strong book. I'm based in Dallas, so a lot of my clients are in Dallas. And you know, the size range of companies across my portfolio is 8 to 50 million of EBITDA. And loan sizes ranging from 5 to 150. So I've got a pretty broad fairway, which is great. That's the nice thing about Comerica Bank, really relationship focused. And about 60% of my book is private equity backed businesses, and the remaining 40 is owner managed and employee owned businesses. Oh, I'm also the chapter chair for the DFW AM&AA chapter. So love this group, and thanks for having me.
Thanks, Amanda. Ryan Bandy with Grey Rock Capital. We're a junior capital firm based here in Chicago, investing out of Fund 6. It's a $285 million fund, all unlevered committed capital. And our mandate, we're really looking to invest a combination of mezzanine debt and equity in every single transaction that we do. It's always backing a private equity sponsor, and we back both funded sponsors as well as independent sponsors. In terms of how we work with funded sponsors, those tend to be businesses 5 to 25 of EBITDA, where we're investing a turn to a turn and a half of mezzanine debt with a minority equity co-invest alongside the funded sponsor. But more relevant today, and why I think we're talking about sort of the evolution of independent sponsors, it's a big piece of our business and has been since the start of Fund 1 over 20 years ago. And when we're looking to back independent sponsors, the sweet spot for us is in what we kind of describe as the lower range, the lower middle market. So businesses with between 2 to 5 of EBITDA, where we can provide one-stop junior capital. So not just the sub-debt, but up to all of the equity as well, to help the independent sponsor acquire that particular opportunity. You know, as I mentioned, I'm based here in Chicago, but we do have 3 offices, 7 investment professionals, 2 in Chicago, 2 in New York, and 3 in San Francisco. So pretty well covered across the U.S.
All right, thanks, guys. We're going to start with deal flow. So, Amanda, what are you seeing? What level of volume? How do things compare this quarter, last quarter? Give us a pulse.
I think it's always good to start with like a general deal flow update. I'm sure you've gotten a lot of that throughout the content around the conference. But from Comerica Bank's standpoint and my standpoint, it's certainly been busier. It's been a busier quarter compared to last year. I think being an election year, having more uncertainty in 2024, and also Q1 of this year having a lot of the tariff uncertainties and changes. There was a little bit of a lag in activity, but I've seen that tick up quite a bit. I've been in credit committees weekly since March. It's been pretty tremendous. There's been a lot of activity, a couple of larger new relationships, some amendments, upsizes for existing sponsor-backed companies in my portfolio that were acquiring like-sized businesses. So a lot of M&A activity. And across that too, I mean, we're partnering with not only managed funds, but obviously part of the reason I'm here is independent sponsors are something that the bank has, it's a model that the bank has supported, and we've got a few really great relationships, some of which we share with Grey Rock. And Tommy
And
also.
Clavis.
Yeah, we all collaborate here, so that's the fun part of it for me, for sure, is getting to be up here with people that we work well with. Let's see. Oh, and just in general, I mean, trends in M&A, I have seen just institutions and our bank favor smaller, less complex deals when we can get them. You know, starting out with a smaller check size, maybe the business is a little bit smaller, but relatively straightforward business model, as opposed to really large companies that have a lot of demand-related risk in an economy that's just been changing so rapidly. So if we can find a clean, simple business model, not a lot of noise, we're chasing hard and being really aggressive on some small opportunities, some really nice small opportunities, but also looking at the larger deals too. So that's for me, as far as me.
All right. Jimmy?
Yeah, I think it's been an interesting year, and I'll be kind of concise with this. If you think about deal flow this year, everybody thought this was going to be a really massive year, and effectively from November through April, there wasn't really a ton of stuff that came to market. Maybe some did or hit pause, but deal flow year to date, year over year for us is down a little bit. But we think it's really interesting because it's really the way we're framing it is you have 12 months of deal flow, because all those deals are still coming to market and new ones are going to come out pretty soon. You're going to get 12 months of deal flow in about 7 months of the calendar year. So we're really excited about the back half of the year. You know, the last 60, 90 days have been really busy. Our pipeline is kind of at all-time highs right now on initial deal screening.
I like it. We're seeing the same thing. A lot more calls, a lot more diligence engagements, a lot more questions around RWI, a lot of activity. So, Ryan?
Yeah, I agree with both points. I think Jimmy specifically agree. Heading into the start of this year, you know, we thought this was going to be an incredibly active 2025 for not just us, but the broader M&A market. And the pipeline was incredibly healthy heading into the start of the year. And really all of those opportunities sort of went away for X, Y, or Z reason. And then obviously a lot of noise and uncertainty that's been injected into the market, specifically with respect to tariffs. So I would say, look, we're 6 to 7 months into the year here, and this year has certainly been softer than we would have expected or anticipated, but I think the broader market is certainly seeing that as well. You know, from a deal volume perspective, you know, I would say Q1 and Q2 have sort of been interesting for us. We've seen some episodes where we've seen some increased deal flurry, but for the most part, when you compare that, you know, at least for us specifically, it's certainly down compared to this time last year. What I will say, when I'm speaking to my friends in the sell side community, I think there are a lot of opportunities on their desk. They're about to launch a number of sale processes, so I do think you're going to see an uptick in activity in the second half of this year, at least from a volume perspective. And then I think counter to that as well, I think there are going to be, or I think there are a number of opportunities on sell-side desks as well, where there are businesses and industries that are less insulated and resilient, you know, with respect to tariffs. So they might just hold pause on that process and wait towards, you know, maybe the end of the year or the start of the next, when they've got a little bit more clarity on what the future looks like.
It's great. Appreciate that, y'all. So the next kind of segment is generally just around the independent sponsor model, how it became popular. Jimmy, tell us the story behind Clavis, how you got to where you are today, the original thesis, how it's going, and what about that was attractive?
Yeah, thank you, Tommy. So Clavis started by our founder, Todd Dauphiné, 12 years ago. He's a former president of a manufacturing company, worked in business development for a large corporation, and was a M&A consultant prior in his career. Kind of wanted to go join up with a really interesting, attractive fund in Dallas. They all sort of said to him, well, you'll be a great operating partner. He said, well, I want to do deals too. Turns out there's a model for that called being an independent sponsor. You get to do deals and be the operating partner. And so he took a run at it. We'll get to this piece later on picking capital partners, but got really lucky and got to know the Grey Rock team early on in his tenure as an independent sponsor. And we closed our first deal with Grey Rock. He's been an outstanding partner, by the way. If anyone hasn't met Bandy, you should go meet Ryan afterwards. Kind of what the evolution of that was, 2 years after that deal, Todd got his second deal done and then hired my colleague Patrick and then hired me another year or so afterwards. So over the last 7 or 8 years, we've really kind of institutionalized our own business and making this a really repeatable thing. We'll get into more of that, I think, later. But the evolution of Clavis is a bunch of kind of hands, roll your sleeve up guys, all ex-consultants, worked in operational stints across different careers, got together that decided, we want to go be deal guys and operational guys. And it's been a really good opportunity for us, and it's been a really good proven model for us.
That's great. So Ryan, when did Grey Rock begin supporting independent sponsors, and why?
Yeah, so we really started backing independent sponsors since the inception of the firm in 2002. So, we've done over 40 independent sponsor deals. It's always been a part of our strategy. And when we first backed independent sponsors back in the sort of the mid-2000s, obviously the ecosystem was much smaller at that point in time. And we were really backing individuals that tended to be at the later stage of their career who decided, hey, look, I'd like to hang my own shingle and do a couple deals on my own and raise capital deal by deal. And so for the most part, those were individuals that we had backed in a funded setting. So we really had the opportunity to get to know them, how they operate, the value that they can ultimately drive to these businesses. But why we've continued to deploy capital into this strategy and will continue to deploy more and more moving forward is there continues to be fantastic talent entering this ecosystem. And when you think about where we tend to focus our time, which is kind of the microcap sub 5 of EBITDA, market's less efficient, you've got less funded private equity sponsors that are ultimately competing for those deals. So it gives us the opportunity to not just be a lender in those transactions, but a significant equity owner in a business that tends to be bought very well. But you got to be patient for those opportunities. So just to kind of summarize it, obviously this landscape has evolved significantly over the last 20 years, and more people are entering this market from all different backgrounds. What we ultimately look for when evaluating new independent sponsors, it's really one of two things. It's, Tommy, as I mentioned, either somebody that came from a funded private equity setting, has experience leading and executing deals, managing deals post-close and driving value, or secondarily, we're also looking to back folks that have operating experience that, maybe they need somebody like us as a capital partner that has experience executing these transactions to get them across the finish line, but there's significant value that they can bring to the table post-close. They tend to be highly focused on a particular industry that they've got relevant experience in. And that can tend to be a pretty powerful dynamic. So it's evolved over time.
That's great. Thank you, Ryan. Amanda, what is the bank's appetite and criteria for independent sponsor deals?
Well, Ryan actually said a few things that are a few of the key points of motivation that I would say the independent sponsor model provides that I might start my response with. The flexibility. You don't have a ticking time clock with an investment horizon and pressure to realize investments, generate returns for LPs. I mean, those pressures are there, obviously, but it's not the same as a managed fund. So what that means from like a timing perspective too, of just looking at transactions, and I think it ebbs and flows with deal flow, the amount a volume of quality deals that hit the market versus, some quarters are a little choppier and you're seeing deals that are coming back from the dead, and those can be good and those can be bad. But what the independent sponsor model benefits from is not having the pressure to have to pull the trigger on investments that might really not make a whole lot of sense or really are well positioned to generate the types of returns that you need to be seeing in private equity. So that's a big pro in our eyes, and I think how Comerica has gotten comfortable with the independent sponsors that we do business with, Clavis included. And a few of the criteria points that we look for is, proven track record. It is harder to look at a first-time deal with an independent sponsor, but you have to start somewhere. There is that. And it depends on the key individuals and the people that started the firm. I mean, it could very well be that actually it's kind of the instance for a new relationship that I'm signing up now that the founder of, it's actually a family office, but similar dynamics, I won't go too into, but the founder was a 30-year private client of Comerica Banks. And they're building out a middle market portfolio right now, and they haven't for the last decade, but it goes towards relationships. It's about who you know and who you have experience with and who you know will do the right thing when times might be tough. And I've seen Comerica lean in and really step in before sponsors have to, maybe go back to the drawing board and put in a little more money to get through a tough time. But knowing that they can and will, that's huge. So who the LPs are is extremely important too, because we want to know that those people will step up and do the right thing. Let's see. Ryan, you mentioned this too, for independent sponsors that have a specific niche focus with operational backgrounds. One that we share, ex-president of North America, Bosch, and he has now a few portfolio companies in aftermarket auto. So, that experience at a C-suite level with large conglomerates like a Bosch, that just speaks volumes. So you trust that they know what they're doing operationally. So it's a lot of other things, but I'll pause there because I don't want to talk too much.
No, that's great. I think you're kind of transitioning into the next subject, which is around challenges that independent sponsors face. Jimmy, what types of opportunities best allow for Clavis to leverage these competitive advantages and, simultaneously, I think Amanda's touched on it, but, some challenges as well?
I'll start with what challenges does an independent sponsor face, and it's a really long list. But I think the way you overcome all of that, right, is, and this is a recurring thing, what experience do you have? Are you a deal maker? Okay, lean into that. Did you come out of industry? Lean into that industry. Do you have an angle on something? You got a proprietary deal. You know that the management team. You have relationships with customers and vendors, and you can lean into that. The biggest piece with kind of our first deal was Todd came out of manufacturing, and it was a manufacturing business that needed some improvement, needed some process, came out of that experience. And our team, as I kind of sort of alluded to, we're a lot of former ex-consultants, anywhere from Strategy and BCG, EY, Riveron. And so what we're really good at is we find a good business with a good management team that just needs help getting to the next level. They need help institutionalizing their business, and they can't grow at the accelerated rate that they want without having this, data experience and knowledge. And that's where we really shine. All of our team leans in and goes and works on building out a more professional and better business. And that sounds kind of simple, but really when you get the KPIs and the dashboards and you can start building better incentive plans for your teams, there's so much you can do once you have a good sense for the data. That's one of the big pieces that we lean into. Another advantage of that, and this is kind of going off a bit, but when you have multi-generational owned businesses, even if they're small businesses, you probably have a really good management team or sales team, but they've been throttled back a little bit. The multi-generational family's more risk adverse. You don't want to be the third generation owner that's then going to break the family company. Well, that's where we're a little bit more risk tolerant as a group, right? We've got capital backstop. We're able to lean in and help. And now they have a partner who's going to be there in the proverbial trenches with them, in the cubicles with them to go figure that stuff out. So it's really finding, especially in the early stages, it took us, I think, until deal 4 or 5 when we said, okay, we're an independent sponsor. We can do this now. And each of those first 3 or 4 deals really required what we had to know going into talking with a lender and one of our co-investors. What is our advantage? It can't just be we found a pretty cool deal from a bank and we won it on the highest price. That's never going to work for us. So I think it's knowing your skill set, and especially in the first few deals, is focusing and leaning into those.
That's great. Thank you, Jimmy. Ryan, what sort of deals do you come across that you think are a great fit for independent sponsors? And then under here also, understanding this can be unique for every independent sponsor. So wide open.
It depends.
It always depends, yeah. First of all, to Jimmy's point, could not agree more. Angle on either the industry and the transaction, critical. Amanda said the same thing. What deals come across that strike me as a good fit for an independent sponsor? First, I'd be remiss if I didn't mention that we've seen this trend in independent sponsors coming up market, and I think that's a testament to firms like Clavis that have been around for 5, 10 plus years, have an incredible track record, and that has ultimately allowed those firms to raise the capital to get those types of deals done. But specifically, for us, and I think a lot of folks that are looking to back into independent sponsors, it tends to be micro-cap deals. So sub 5 million of EBITDA, where you're not seeing significant competition from funded private equity sponsors. And the reason being is we can see our independent sponsors either source those deals on a proprietary basis, or in lightly brokered scenarios, the process just isn't efficient. So in those situations, you can sign up a fundamentally really good business at either a market multiple or a below market multiple if it's an inefficient process. So that's where we ultimately tend to play and focus our time. It's really the angle on the transaction.
I like that term, lightly brokered. I'm going to steal that. That's good. Amanda, anything to add on challenges and disadvantages you've seen?
In the independent sponsor model, one thing I've noticed with the deal that we're actually still in process on, it's one of our sponsor relationships that are fantastic. We cover about 25% of their portfolio, and this is a new deal actually out of their new SBIC fund, so they're providing all the capital. It's another, probably one that, Ryan, I need to fill you in on, but they had a deal, this is a managed fund, they had a deal come from an independent sponsor that is newly formed. The individual who started the group rolled out of more bulge bracket experience. I think it was Goldman doing larger cap transactions. And I just happen to know on this particular opportunity, the level of diligence when we were getting into our diligence, and I had my questions framed out. It's a contract-based business, so just even nitty-gritty breaking down of contract analysis and what billing terms are like, and how you hit gross profit margin on your respective projects, and it wasn't all thought through, and I just have a sense that it's not as common for individuals like that. The experience isn't seeming to translate. I think when you come from maybe larger cap and you're used to maybe publicly listed companies that have like all of the transparent reporting and auditing in the world, and it's easier to size up deals and value deals that way. But the middle market valuation, it's art, not a science. But again, with the angle and the experience that comes from independent sponsors, it matters a lot. So that was just one challenge. And, well, I might not but the deal could change a little bit. And, retrading deals is something we all want to avoid. And so for what that's worth.
Jimmy, anything to add? I saw you.
I do. There's a very key part from an independent sponsor on a challenge we face is when you're talking to that investment banker or broker, where do you get your money from? And that is probably one of the biggest challenges that we have when it comes to competing. It's an interesting broader topic, and I think we'll talk about it, I think, in one of the other pieces coming up that Tommy's going to ask, but...
It's the next question.
May I just
Very
lead right
natural
into it?
segue, yes.
So, the challenge is where do you get your money from? Certainty to close is one of the most important things for a seller, a broker, a banker, anyone involved in the transaction. And with an independent sponsor that doesn't have that backstop built in, how do you get there? The easiest place to go to that is probably the market that is built for independent sponsors. There's a lot of groups out there that are so independent sponsor focused. When you're going out to raise money, there's a variety of reasons, right? Always depends. You can go through a bunch of high net worths. You can go through family and friends. You can do all that stuff. If you need to raise a little bit more money for a deal that's 2, 3, 4, 5, 10 million of EBITDA, you probably need to go to a very large anchor. What is great over the past several years, there have become a specific capital market for independent sponsors. And I think the number one question for anybody who's interested in being an independent sponsor, when you get to meet capital providers at events like this, is have you ever done an independent sponsor deal before? The first thing you need to rule out is any friction you have in being their first time deal maker. There are now so many groups like Grey Rock, Align Collaborate, you've got Ocean Avenue, you've got Trident. There's a whole group of people out there that are built specifically for independent sponsors, and just a great network of people to have on your short Rolodex. Because once you're able to say, I know those guys, those people know you, guys and gals, those people know you, and they can write a letter of reference or anything like that to accompany an LOI, that makes the process so much easier just for getting over that hump.
That's great. This question is not designed to be low-hanging fruit for the insurance guy, but what would your advice be for selecting third-party service providers? Amanda wrote this, so.
Well, it's the same. The same thing applies. I mean, a lot of it going through, especially first or second time deals, is every deal's a little bit different, and you may not know what things are going to come up. You want someone that's going to be really helpful and work with you. And so having a relationship, so you can call someone, text somebody, email. Maybe if you're not registered, you probably don't want to text people, but call somebody, email somebody with, hey, help me go through this. You need almost not a friend necessarily, but you need someone you can trust to ask for some help and support. Like if there's a project-based business, you may want to talk, hey, what's bonding like? I've never dealt with a union before. I've never dealt with some of these issues. Help me kind of think through how I need to think about this and then how I can mitigate that risk going forward. So it's just being collaborative, going through a Rolodex of people and selecting somebody is probably not the easiest way. I think it boils down to like, how do you remove as much friction as possible? And relationships, things that you foster at AMAA are kind of the key pieces for that.
That's great. Thank you. Switching gears a little bit. Ryan, what motivates Grey Rock to continue backing in independent sponsors and kind of doubling down on the space?
Yeah, I think we hit on this piece earlier, but there just continues. I mean, every year, every 3 months, every couple of months, you continue to see fantastic talent ultimately enter this ecosystem. And, our experience backing independent sponsors, for 20 plus years, 6 funds, they tend to be very smart, gritty, entrepreneurial investors and operators. And so, for me specifically, it just makes it a lot of fun to be a small part of that story and be the capital to help them in partnership with the management team ultimately drive the next phase of growth. And then, when you think about where we tend to focus our time, the sub 5 million of EBITDA market, again, a much more efficient market, less competition. I mean, you do have to kiss a lot of frogs to find the right opportunities. But if you're willing to be patient, you can buy a fundamentally really strong business at an attractive multiple. And if you pair that with somebody like Clavis Capital, Jimmy's team, an independent sponsor that's got specific industry expertise, and a clear value creation plan for that particular asset, that can be a pretty interesting return outcome for all stakeholders included. Again, as I mentioned before, I think it's become a bigger and bigger piece of our business over the course of the last couple of years. And as we look out 5 years, I think it will continue to grow to become a bigger piece of our business.
That's great. Thank you. Amanda, what are some things you've seen that help independent sponsors as they're presenting to financing sources?
Brian, you said something that's really important to us, clear value proposition. Just being really clear and succinct when coming to the banks with, a really firm, organized, thought through financing structure in mind that, you can start suggesting and we work backwards from there. I do like to have the opportunity to work alongside groups, meaning, the earlier the better. And if the deal isn't all, morphed and finalized, I do like the ability to be able to help and be creative, and maybe it's slightly different than they would have imagined, but whether that be structure or otherwise. But being part of really getting to a solution that just works for all parties. But it is ideal. It's ideal when an independent sponsor, especially if they're new, starting out, the advice I would have when approaching banks is just probably it's the most efficient use of time if you're new. I think, again, with more mature, decade plus long proven independent sponsor models, it can be a little different, but, probably coming to a bank with, who your committed capital sources are, what those discussions have been like, what the clear financing request is, and what your value proposition is.
All right. Ryan, this kind of brings us to the concluding segment here, which is how has the independent sponsor community changed over time, and what does the future hold? Ryan, what changes have you seen across the independent sponsor community?
Yeah, well, first of all, and I think this has been a common theme today that we've talked about, this asset class has grown tremendously over the course of the last 5 to 10 years. And, I think an example of that is you go to the McGuire Woods Conference, which is a dedicated independent sponsor conference in Dallas. And as a firm, we've been going to that conference for the better part of 10 plus years. And I think 10 years ago, it was 100 people. 5 years ago, it was 500. This past year, it was over 1,500 people. And so as a result of all the talent that's ultimately entering this ecosystem, with that, there's a significant amount of capital that's being deployed and raised to focus exclusively on backing independent sponsors. So you see firms like us, junior capital firms, SBICs, banks that are focusing more and more on deploying capital into this ecosystem, which is fantastic. And then, Jimmy had mentioned this. I think one of the things that I've noticed, or one of the trends in the last, I think specifically 18 months, is there's a lot more equity-focused capital that's being raised to deploy into this model. You mentioned Align Collaborate. Multiple firms within the last 18 months have raised dedicated funds to invest equity backing independent sponsors. And so I think another trend that you are seeing, or that we are seeing, is there are a lot of folks that are coming from funded private equity settings, and for X, Y, or Z reason, maybe it's the flexibility, you name it, that are ultimately looking to, to head out, raise a single shingle, and ultimately start raising capital deal by deal. And with that, I think there is going to be significantly more competition chasing these $2 to $5 million EBITDA businesses as you see more people entering this market. And as a result of that, I think it's going to continue to be more critical to either have, again, an angle on the industry and a clear plan for how you're going to grow those businesses, or secondarily, an angle on the transaction. I know you love the term lightly brokered transaction. So that's kind of where we see things heading. I think it's just going to continue to grow exponentially year over year.
That's great. I hope it does. Amanda, anything to add?
I have been seeing, I think, further receptiveness in the market from managed funds towards backing and partnering with independent sponsors. That's something I've noticed. I don't think that that's going to slow down or change. Didn't we also talk when we did our prep call about, you could see some progression up market with the independent sponsors for reasons that you touched on, that it's getting more competitive in the smaller cap space. And funny enough, I think managed funds have been coming down market a little bit it's almost like they're going in the opposite direction because that's where they're finding their advantage points. And let's see. Oh, I think it's really interesting. This is probably a whole different conversation in and of itself, but I think there are independent sponsors that are getting their starts by, acting more as the finder, which is kind of to compete with investment bankers and brokers out there. But that's a way that I've heard firms start, is maybe they capture and roll whatever success fee that they would be owed by bringing the transaction to a managed fund or another firm. And that's a way that you can start to build your track record. That's been an interesting theme that I could see, few and far between, but that's a way that I've seen players get their start.
All
And
right,
there will
thank
be
you.
more.
Yes, there will. Thank you. All right, Jimmy, the closer. How has the independent sponsor community changed since Clavis was established, which I think we've hit on that a few times, but any other color would be very welcome. And then what is on the horizon for the next 5 to 10 years at Clavis?
I mean, the last 5-10 years, we've kind of had to explain what an independent sponsor was often, right, to an investment banker. Explain, here's where we get our money, here's how we do our deal. Yes, we operate the same way as a fund in all of our processes and things like that, right? Now I walk in and you often don't have to. Most people just ask for your money and say, we're an independent sponsor and we have been backed by X, Y, and Z, or we have relationships with these individual capital partners, and it's okay. I get who you are now. That makes a lot of sense. 10 years ago, are you a search fund, or what are you? And now it's becoming common throughout our industry where people know kind of who we are and what we do. One comment I want to add before I say what I think is in the future for us is just isolating comments that you guys have made on the role of independent sponsors in this market. There's so much dry powder out there. Deal teams can only be so big. There's always going to be a market for an independent sponsor, either as an extension of capital allocation for large funds or small family offices or large asset managers that don't have operational teams. And you guys both hit on those points, right? That there's a need to do deals. Independent sponsors are a great conduit for that, for a lot of big firms to do it. And that's why I think you're seeing funds actually lean on independent sponsors here and there for a couple deals. So if I open my crystal ball for my next 5 seconds left in our session here, Clavis is going to continue to do the same thing. We've been successful. We've put a lot of time into it. We're really hoping to get deal number 10 done this year. I think that'll be a great mark. We're building out a team, already thinking about who's going to lead the next deals and how we're going to keep going that way. We've spent a lot of time building a network of capital partners and building a reputation, and with brokers and bankers. And it's been a model that's been great to us. So I just kind of think it's the same thing for us. Continue to try and do a couple deals a year, and continue to work with great partners like these folks up here, and maybe some of you guys in the future would be great too. So I see that. I think that the closing statement is, I think that the independent sponsor role will be more prominent in the future because there is a real purpose for what we do.
All right. Well, Ryan, Jimmy, Amanda, we are out of time, and thank you all for sticking around and coming to this, and we greatly appreciate it. Good job, guys.
Thanks so much.
Thank you.
Thank you to Tom and Mixon and our panel for such an insightful look at where the independent sponsor model is headed. Be sure to tune in next week as we bring you more conversations from M&A Summer Conference.